Creamer Media's Resources Watch highlights some major events that took place during the year. The gold price, which set a record above $1,430 an ounce in December 2010, settled back to its January price of $1,380 and was described as being in the early stages of a bubble. Metals consultancy GFMS believed the gold price would rise over 2011, possibly breaching the $1,600 an ounce later this year or early 2012.
I think it's in the early stages of a bubble. I mean, clearly when you get to a situation that investment demand pretty much matches in size fabrication demand for the metal, you are moving into bubble territory. In other words, the market is becoming increasingly reliant on higher and higher levels of investment to move higher, for the price to move higher. And that, I think, in the long run is unsustainable. But if you want to call it a bubble, I think the bubble can get a lot larger if the scale of investment continues to grow.
Anglo Platinum said in February it was confident that its prudent capital expenditure model would be more than sufficient to ensure that the market was adequately supplied in 2011 and beyond, as well as to meet its aspirations of increasing the production of low-cost ounces.
The capital that we spend is directly related to our forecast of the future. Our forecast to the future is to increase our production by 100,000 ounces per year up until 2013, and then a slightly slower growth to about 2.9 million ounces in 2019. Overall, that gives you a sort of a 2.5 to 3% growth of our production level.
In March, the South African government launched the state-owned mining company, reopening some political divisions.
To say, whilst we want to make sure that we play on an equal field with all private sector players, it will also be wrong of us not to have a particular bias towards a state-owned mining company whose primary motive is to make sure that we've got energy resources.
Well, we're not going to give any preferential treatment to the state mining owning companies. It will compete in the open markets like all other companies.
JSE-listed iron ore miner Kumba opened a new automated iron ore sampling plant in April at the port of Saldanha, which last year exported 47 million tons of iron ore from South Africa.
We've invested over 100 million and Transnet have invested over 60 million rand. It was really upgrading and bringing the very best and latest technology into sampling. When you sample more frequently, get the analysis back as quickly as possible. The kind of technology that you saw today, robo-labs, robotic labs, that sort of stuff is cutting-edge technology. We need information at the mine to be able to blend, to get a certain level of material coming down to the port. This is a case of private sector working very, very closely and very narrowly with our state partners, Transnet.
In May, the Department of Mineral Resources launched the South African Mineral Resources Administration online application system in an attempt to streamline the application process and make it transparent.
We are confident that the new system will enable us to tap into the market and ensure that there's increased exploration. Through the system, we'll be able to see where are challenges, where are delays, and we can, as management, take corrective actions, make interventions in a sustainable manner, and ensure that there's growth of mining in South Africa, because, as you know, it's one of the key economic drivers in our new growth path.
A roadmap to chart development plans for South Africa's coal reserves could be released by mid-2012, panelists at the Coal Trans South Africa conference in Johannesburg said in June.
What is the coal roadmap? Really, it's an attempt to bring all of these parties and these divergent views and opinions and factors together in one forum. That one could find a way to plan our route through all of these potentially conflicting drivers. It's also a review of what is the current status and proposals for some scenarios going forward, and then hopefully it's something which would guide investment strategy policy in the country later on.
African National Congress Youth League leader Julius Malema is unlikely to gain enough support to pass nationalisation as ANC policy at the ruling party's national conference in December next year, political analyst Justice Malala said in July.
If Julius Malema wants nationalisation to pass through and become official ANC policy, he needs to make sure that in December 2012, when the ANC goes to its conference, he has the majority of delegates of each and every province to vote with him on economic policy in Mangaung in December 2012. Can he do it? He doesn't have all of the provinces. He controls Limpopo ANC, not ANC, ANC, and those are the guys who will be at the conference in December next year. For the rest of these provinces, they remain very much Jacob Zuma and other people who support it.
In August, Coal of Africa chairperson and mining entrepreneur Richard Linnell said that discussions around nationalisation created uncertainty, and South Africa instead should look at alternatives to nationalisation, such as the creation of a sovereign wealth fund.
I think that one of the best ways we could look at this is the concept of a sovereign wealth fund. It's worked in Norway, it's worked in Singapore, and I think that we can look at this sort of stuff for South Africa. In that the sovereign wealth fund would invest in these projects up to the 25 or 26% or more if they chose to, and the benefits from that investment would then flow from the fund to the people who don't have mineral rights in their territories. So what I would suggest is that instead of having this 26% BEE, that the sovereign wealth fund in fact is the participant.
Mining is a dangerous occupation, and South Africa's hard rock mining is more dangerous than most types. For this reason, there is a widespread desire to increase the use of technology in South African mining.
So the hard rock mining industry in South Africa, that's gold and platinum, they mine in 3 cycles, and in between when they blast and when they remove the ore that they've blasted, they have to do a safety inspection. At the moment that's conducted by people, and it's quite a dangerous task. And so what we're hoping to do is have a robot that can go in and automatically do a preliminary inspection and generate a risk map for a miner who has to go in after the fact. Basically, we want to take a human being out of a really dangerous, dirty job.
Daphne Mashile Nkosi, who was in the thick of it when students went on the rampage for better education on that historic June 16, 1976 day in Soweto, was in October more than halfway through the mining and sintering segment of an integrated project in South Africa's dusty Kalahari manganese field.
Because I was already in ASizwe when we did Exaro, in 2006, we had some little cash and some assets that we could actually use to raise capital. I had a house, I had a car, and we went to the banks and I actually raised 12.5 million with my husband to actually do the pre-feasibility study.
And so you did the pre-feasibility study and then took it to investors?
Investors. I went to the New Africa Mining Fund and everyone else. No one wanted to find me. And I was told that this business plan will remain in my briefcase. Patience does, play, and I always look at the vulture. It's a very patient bird. It waits out there and it will, get what it wants at the end of the day. When I was nominated by UN to actually go to Japan and do development economics, I came back, I had transformed.
In November, 6,209 worker shareholders of JSE-listed Kumba Iron Ore each became pre-tax half-millionaires in a 2.7 billion rand payout in the first phase of an employee share ownership plan.
6,000 people walk away being half-millionaires overnight pre-tax. And not all ESOPs work out this way. Tell us about this particular employee share ownership program.
I think what's been very pleasing about this, about share ownership, employee share ownership, in particularly this scheme, is that this is something that companies have been talking about for a long time, to say when the company does well, we want the employees to be able to participate as management have in the past. And now we've seen that because of the commodity has done well, the company has done well, because of that employees have participated with dividends.
Kumba's ESOP, the share ownership employee scheme or the plan, has proven to be the most successful in South Africa's history.
South Africa-based junior coal miner Lonto Coal revealed plans in December to open an office in Hong Kong.
Our initial plans were started in the beginning of 2010 when we realized that we have large-scale projects that we have to build. A 46 million ton a year mine in Zimbabwe, 200,000 tons a month of anthracite production in South Africa. These are capital intensive. We therefore had to find a deep equity capital pool, and Hong Kong Stock Exchange provides us with that opportunity of being able to raise large-scale capital to fast-track the development of
these mines in Southern Africa.
Those were some of the headline makers for 2011. With the global commodity market consistently keeping us on our toes, it's best to stay logged on to miningweekly.com to see which markets will steal the show in the coming year.